Guys, you're welcome to today's content on my YouTube. I'm so glad to have you guys here watching the video. I really appreciate you guys. Don't forget to like, comment, and then subscribe if you're new. So in this video, I want to give an explanation on how you can build small accounts using the same strategy I teach. How you can grow a very small account using the same strategy that I teach on my channel. So growing small accounts is actually not hard. Let's take for instance, you want to grow maybe $5 to maybe let's say $5. You want to build $10, you want to build $15. Now this strategy is really going to work for you because it's just for scalping, just for you to scalp it out, and that is all. So if you want to scalp, you're going to use higher time frame, but your entry is going to be on the 1 minute time frame or on the 5 minutes time frame, depending on how high your small account is. Yes, what I mean is that if your small account is $5, I will advise that you use the 1 minute time frame to enter the market. And if your account is like $10, $15, $20, yes, you can use the 5 minutes time frame. It's going to give you more leverage and it's going to give you more profits when you know when to step into the market. Okay, so like I said, you're going to make use of the higher time frame and you will make use of the lower time frame. So what do you have to do on the higher time frame? Now you need to understand reaction zones. Number one, ensure that you understand the reaction zones of the market. Then secondly, you have to know the POIs the market is currently, where we are going to, where we are coming from, and where the market is currently going to, so that you don't get stopped in the market. Now once you understand where the market is coming from, you should know where it is going to. For instance, if the market is inside a particular POI and you are expecting it to take your external liquidity, that's really great. Okay guys, that's really great. And you are going to trade, you're going to scalp until it takes that external liquidity. You have nothing to worry about. I am going to explain all of this. Okay, so this is volatility 25 and I am on the 24 hours. I am using the tradingview.deriv.com. Okay, so if you're wondering what I am using on the tradingview.deriv.com, that is what you need to use. If you want to use your trading view, it gives you access to different tools that you can use in marking out your POI. Okay, to marking out your structure. I don't really know why I'm talking about POI, but that's the essential market, guys. So we have a PMS to the downside. Let's just start from this place and let's forget about what currently. So you should know we have a BMS to the downside, and remember what I in my last video, we had a talk about fair value gap. So let's change the color. So we had a talk about fair value gap, so I am marking out this fair value gap because it's one of the places the market can use in reacting. So we have this. Okay, so let's mark out our POI. Remember, I have explained what POI is. I have explained what fair value gap is, so you shouldn't have issues marking out your POI. You should not have an issue marking out your fair value gap. I have explained all of this. So I'm going to mark out the POI I am expecting the market to get into. So let's say I marked this out. Let's say I marked this out. This is my POI according to the POI I taught you guys in my previous video. All right guys, so now the market did not get to POI, right? It used the fair value gap. It is inside the fair value gap right now. Let's forget about what is happening on the other side. So it is using the fair value gap. So what are you going to do currently now that you know where the market is? The market is inside your fair value gap. So what is that thing you need to do when market gets to your fair value gap? Now the next thing is to know what the market is going to take. That is what I call my external liquidity. So market has created this particular low. So if the market is going to sell and we're going to have a lower low, this is where the market is going to come and take. This particular low is what the market will come and take. So since we are inside the fair value gap, so you should mark out the low or the high. Let's take we are in an uptrend. You need to mark the high the market is going to take if we are in an uptrend. So this is a downtrend. I have marked out the low the market is coming to take. See this clearly, guys. We have lower highs, lower lows, lower highs, lower lows. So if the market is going to sell from the point it is, where is the target? This is the target. This is the low it is going to target. This particular low, this external liquidity. If you watched my video on liquidity, I explained what external liquidity is. External liquidity is the low or the high that draws price. It drags price to itself, meaning you are expecting the market to take that particular low, or you are expecting market to take that particular high. Now, in a downtrend, we are expecting market to take lows. You are expecting the market to take lows in a downtrend. Then in an uptrend, you are expecting the market to take the highs. Okay, so this is the low we are expecting the market to take. This particular low, since we are inside our fair value gap, so the market might choose the fair value gap and it might dip more into our PO high, but nevertheless, I'm going to mark out this my external liquidity. So what's the next thing you need to do once you've marked out your external liquidity? You go to your entry time frame. You go to your entry time frame. This is going to give you a lot of scalping inside the range. It is going to give you a lot of scalping inside the range. That is the reason I used the 24 hours, guys. The reason I use the 24 hours is that it will give you a lot of scalping opportunity. If I use the 1 hour, you can just scalp once and that's all. But you see these 24 hours, using the 24 hours to mark out your PO high, using it to mark out the imbalance. Number one, it's going to give you a lot of scalping opportunities. It will give you a lot of scalping opportunities. Number two, you being wrong is going to reduce. The percent of you being wrong will reduce because you marked it out on the higher time frame. You marked it out on the higher time frame. So you being wrong is the percent is going to reduce. Okay? So the next thing you want to do is go to your 5 minutes time frame. Let's see what our 5 minutes has for us. You go to your 5 minutes time frame. I'm going to just do this to know where we are in the markets. So, okay. Okay, guys. We're on the 5 minutes time frame. And hold on, guys. Now I am using previous data to make an explanation to you so that you can understand. Exactly, guys, so that you can understand. And we have the 5 minutes time frame here. Hold on. Okay. All right. Now on the 5 minutes, let's go to the 5 minutes time frame. I needed to confirm something. You can see the lines we marked out as our fair value gap on the higher time frame. So the market got into the line here. Okay, this is the line here, guys. This is the line. The market has gotten into the line. Remember, the line we marked out as our fair value gap on the 24 hours time frame. On the 24 hours time frame, since we marked that out as our fair value gap, so we'll start expecting a reaction from it. It's either it uses the fair value gap or it gets into our PO high. Either ways, that is what we're expecting. We just want to get a confirmation to enter into the market. So now that the market has gotten into the fair value gap, see what the market is doing. So this is where the market got into the fair value gap. I'm going to mark that out. You can see the beginning of reaction into the fair value gap. And also, I taught you guys about entry confirmation. So you shouldn't see this as something new. Remember, I told you guys that a lot of people, immediately we had a break of this low, they will want to sell around this area to continue the sell. Why? Because we are already in fair value gap. We are already inside the fair value gap. So they will be like, okay, that's a good area where the market should continue to the downside. Okay, that's a very good area for the market to continue to the downside. So immediately we had a break of this. Low. They will expect the market to continue the sell from this place downward. And see what the market did. The market did a good deception. It started selling from this point and broke this low. Now, what I actually saw here is that we had an inducement. The market induced. After the market induced, market could not break this high. Now, once market is unable to break this high, that is a failed high, meaning this is a failed high. So it is 80% sure the market will come to break that low that gave a failed high. Sometimes the market will come to break that low that gave a failed high. So the market broke a low that gave us a failed high. So it gave us ounce of liquidity, making this particular low, this is 5 minutes, guys, making this particular low a strong low. So anything below this low, especially that we are inside our FVG, anything below this low, we are selling to take that external liquidity that we marked out on our 24 hours time frame. It is going to take the low we marked out on our 24 hours time frame. Now see that, guys, it will give you a lot of scalping opportunities because markets will use range structure continuation inside the market before it takes out our external liquidity. So this is a very good and sweet trade for you to scalp. So when we talk about range structure continuation, it simply means market is not going to manipulate so much inside the market. It's going to give you your normal higher high, higher low, higher high, higher low until it takes the external liquidity. That's very sweet, right? So I'm going to explain to you. So now you can see market took out this low, which is a total break of structure for me. It's the break of structure for me. So immediately we took out this low. What you should look out for is what is your continuation to the downside. Now, this particular low is the external liquidity of this range. This is the external liquidity of this range. So we are expecting the market to use an untested area to continue to the downside. And that was what it came back to do here. Market came back here. Now, immediately markets came back to that area. What is the next thing you're supposed to do? You wait for a break of structure here. And listen carefully, guys. This is a BMS. This is a BMS to the downside. A BMS to the downside. So you mark out your PO high. You mark out your PO high. See these guys. On the 1 minute time frame, we have a short-term bounce here. We have a short-term bounce here. We had a short-term bounce here on the 1 minute time frame. On the 1 minute time frame, yeah, I think we should get to see that. That's a PO high on the 1 minute time frame, and the market used it. I mean, it was very, very sweet. You could have actually entered the market. Okay, the 1 minute is actually not loading, guys, and I will not want to take so much. I won't want to take so much of the time here, guys. So the 1 minute did not load. Let's try it again. Okay. It's not loading. It's not loading up. So sorry about that, guys. Just wait a little bit and let's see what the market has for us. So we had a short-term bounce on the 1 minute time frame, obviously. Okay, I'm going to go back to our 5 minute time frame. Let's not complicate so much and let's not delay ourselves. So okay, I'm going to give an explanation about that. Now when we talk about short-term bounce, it is just a particular PO high on the lower time frame. It is a PO high on the lower time frame, maybe a base candle or something on the lower time frame, and it is very obvious on this 5 minutes time frame. So that's a short-term bounce, and this is your void area, guys. Remember what I told you about fair value gap. So you can see this is where we have our fair value gap. We have our fair value gap here. Let me just draw it with this. Are you seeing that? We have our fair value gap here. So what are you expecting? For the market to dip inside and you take your buy, and that is it. See our fair value gap. Market used it perfectly. So we had another break of structure to the downside. We had another break of structure to the downside. So where will you enter for this buy again? Remember where we are going on the 24 hours time frame. This is really sweet, guys. So immediately we broke this low again. You know, your TP is going to be here. Once you enter from here, your TP should be here. This is where your TP should be. Once you take out your TP, once it has taken out your TP, you should look how we had a BMS here, our internal BMS. This is a BMS here on the 1 minute time frame. This week is actually a POI here. This particular week is a POI on the 1 minute time frame, and the market used it. So if you are entering from here, you will take out your TP here at this low, this external liquidity created for that range. You will take out your TP, so you can enter for the buy, for the sell again here. Enter for the sell again here. You take out your TP. You can see how sweet it is. So you're waiting for the market to come back to this area also. Immediately it gives you that particular move. So you're waiting for the market to come here, market to come back here. So you can see the market did not get there, and it used that fair value gap. See the fair value gap I'm talking about. See this fair value gap, guys. See this. See. This is a sweet fair value gap. The market used the fair value gap in continuation. Also, we use the fair value gap in continuation here because we have BMS to the downside. See a BMS to the downside. Now this will take you to wait patiently on the higher time frame for it to get to where you are going to, for the market to get to the PO high. So you have to wait patiently. So since you are building a small account, you need to be a very patient person. If you are building a small account, you should be patient. You should be patient. Not that you should try. No, you should be patient. Building a small account takes time, and you need to use the patience in building it. So you don't have to rush. So see where the market came to again. This is 5 minutes time frame. Before you know it, you've scalped like 10 times in a day. Yes, guys. So you can see the market came back to this POI, and it used it in continuation to the downside. This is where your stop loss will be. See where your stop loss will be. Your stop loss will be above this high. Your TP is going to be below the low created. Below the low created. So you can see market came back. Market came back to that area, and it continued the movement to the downside. So we had another BMS to the downside. This is another BMS to the downside, and you're expecting the market to use this area to continue, and market did use that area to continue to the downside. Before you know it, all of this you are taking would have carried your 10 USD to about $40-50. Yes, it would have taken it to about $40-50, and this is volatility 25. The lowest lot size is 0.5. Before you know it, your $10 is now on $40, so that you can take swing trades. It will enable you to take swing trades. Once you've carried it to $40, you should be looking out to day trade. You should be looking out to day trade, not just scalping, because sometimes you won't have that psychology for scalping. Trust me, you might not have that psychology for scalping. So we had the BMS to the downside again. You're waiting for the market to come back to this area and move in your direction and see what the market did. It actually did that. You place your TP here. You're waiting for the market to come back to this area. This is the first SL you will hit. Okay? So you're waiting for the market to come back to this area. Market came back to this area and took out this high, because we are actually at a strong PO high here. That is why markets actually did this, in taking out liquidity to fuel the continuation. So imagine you put maybe your limit or whatever, you put it here. This is the first stop loss you are going to hit. Now imagine you already thought, okay, I've made a lot of money, let me over leverage, and the market eats you out here. Every money you've gathered, all the money you've gathered, everything will be gone. Why? Because you are greedy. You need to be patient and watch your greed. Control the greed. Build it with patience. Control the greed. So imagine you sold here. You sold here, and the market takes out your stop loss, because definitely it will take it out here. Imagine the market took out your stop loss and the market starts moving in your way. There was actually a strong PO high here. That was why market pushed up to give us liquidity to fuel the continuation. Remember where we are going on the daily time frame. So once you are able to get where we are going on the daily time frame, so we had BMS to the downside here. Market is not expected to take out an internal major liquidity until it breaks out our external liquidity. So see what the market did. It used our secondary area where we had untested zone to continue to the downside. You would have actually missed this trade because you pick out this area. So that's not bad. If you do this multiple times on volatility 25, now you should look out for area, you should look out for assets that are not really volatile. You shouldn't be doing this on volatility 51s, and you have a $10 account. You shouldn't be building this on volatility 50s. You shouldn't be doing this on volatility 100, because in fact the first one you might do might end you on loss. That's it. You might end up in stop loss. So you shouldn't be using those high volatile markets in building your small account. You can work around volatility 25, obviously. You can work around volatility 75 1s. You can work around volatility 100 1s. Those are the assets you can use in building your small account. Stop chasing high volatile accounts. Stop chasing high volatile assets, rather. Stop chasing them. It won't give you, in fact, let me just unleash this secret. High volatile assets won't give you as much money as low volatile assets will give you. That's just a secret I have discovered. So guys, let's move on. That's not what we came here to do. So okay, I think at this point we've already taken out our external liquidity. Let's check it on the what's the name, on the 24 hours time frame. So at this point I think we've taken out that external liquidity. So since we've taken it off, you, in fact, you shouldn't look forward to scalping inside again. Once we've taken out our external liquidity, you wait for what the market wants to do. You take it off totally. You take it off totally and wait for the market to dip inside your internal structure. Wait for it to dip inside your internal structure and give you a move to continue. You can check it on the 24 hours time frame or on the 4 hours time frame to know where the market is currently going. Okay, I'm not sure this actually wants to load though. So I hope you guys already got everything I explained. So once we've taken out our external liquidity, wait for the market to push inside and give you deep retracement. It is not those kind of small retracements we are seeing on the 5 minutes time frame. Go back to your 24 hours, pick out another POI you are expecting the market to dip inside. Once you see the market get inside it, you repeat the same process, and your small accounts will definitely grow. Your small accounts will definitely grow if you follow this instruction. This 24 hours is not loading, guys. I believe I have dished out value for you in building your small account. All right, guys, I'm going to see you guys in the next video. Keep living in the atmosphere of profits. Bye, guys.